Good afternoon, traders. This is Christian from Hertz Trade Group, and today is Tuesday, May 2nd. This is your end of day market charts, everything that the themes of the day. We're going to go over all of those. Risk disclaimer: everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer there. So themes of the day. Clearly the banks got walloped again today. The KRE, that's the regional bank ETF, was down over 6% for the day. That's a huge move down. That is continuing to break down, to break through the lows of what we've seen recently. This range that we were hanging around for about a month has been broken, and we are moving to the downside. On the weekly chart, we did take out this virgin point of control. So this would be on the weekly chart, this would be a possible place to bounce. All right. Clearly to me, this looks like, hindsight 2020 on the weekly chart, but this looks like a big old head and shoulders pattern. Again, the head and shoulders patterns very rarely are exactly what you think they're, with the left shoulder and the head and the right shoulder. Sometimes you get a couple of these, two shoulders on the left side, a peak, and then a couple shoulders on the right side, and then basically you're breaking some type of a neckline. And then once that breaks, it's where there's support, or in this case, what I use on my charts, which is volume at price. We went all the way back to this value area that's back from a couple of years ago, right? Again, the red line is what's called a virgin point of control, VPOC, as I call them, which is basically where there was a lot of buyers and sellers that previously set up. That previously met up, not set up, sorry, and we're returning back to that level at this point. Notice again how the price wasn't even involved in this at all. So quite ugly, and a lot of pressure here. And I think also what had an impact today is just hearing about this debt ceiling issue, right? This is not a good thing for anybody. It's a mess, and I'm not really going to touch it right now in this video, but we have a major spending problem, and for the time being, if they don't raise the debt ceiling, it's going to hurt a lot of Americans. So the sooner that they can get this situation rectified, I guess, then the sooner this will be better for the average American. If they bring this all the way out to the wire, there could be some more pain, right? Not only in the market, but in just people's day-to-day lives. So we'll see how that goes. Let's get away from that conversation for a minute, and let's talk about bonds. So, some of the moves that we're seeing are very similar to what we've seen in the beginning of March, where the first issue happened with the regional banks and Silicon Valley Bank. But here's the bonds. Remember, they had a really sharp decline yesterday, meaning rates went higher. They reversed most of that move to the downside, right? So kind of a more risk-off tape, right? People, the flight to safety trade going on in the bonds, which were up 1.5% for the day, gets us back above that 200-day moving average. Right, TLT also same thing, right, which is a little bit of a different maturity. That also moves back to the 200-day moving average. The dollar, which was strong yesterday, gave back some of those gains, not all of them, but again, not as big of a move. Gold, which was a big thing today, just like it was back here in March, right? Watch this 2024 level. We closed right at the top of the value area for the month of May. Here's what GLD looks like, right? Maybe a little bit better looking chart. That name getting through the top of its value area. That's 187.07, right? And then Bitcoin, right? Which also marched up, not quite as much. I mean, not quite a good looking chart as the gold, because it's an inside day from yesterday. Bitcoin really sold off yesterday. So regardless, those areas outperformed. Also, when we look at our gold miners, right, here's GDX. I actually like this GDXJ chart, which is the junior gold miners. Let's just flip this back here on. There we go. So nice, when we look at this chart, I was going over this chart earlier on Benzinga, but here's your nice move up, right? And a nice retracement, right into the 20-day moving average. 20-day moving average meeting the 5-day moving average, and a nice squeeze higher. So I like this here. It's not extended, and move higher. And if you go through some of these individual names, some of the, let's see, do I have the right name? It's GMI. What's GFI? Goldfield. Sorry, I almost forgot. But I mean, there's some momentum in these smaller names, right? Same thing. Nice little. Well, not exactly the same thing, but tight price action for a little bit, and a nice extension higher. One of the names that I really like is this FNV, which I actually unwound it. Unfortunately, yesterday I didn't know because this name reports earnings today. But nice move here, and it was up 2% on the day. I don't know if they've reported yet. But again, I really like the chart here as I was positioning into it towards the end of last week, right? That's Franco, Nevada. So gold miners, these charts look pretty darn good. And I would say, just to kind of get back to the themes of the day, what else did we see? Well, you could see on the bottom left of your screen, bad breath, once again, right? That's been the theme now, besides those last 2 days of April, the breath has not been good. So, in fact, if you look at your sectors for the day, gold miners were the only thing that was really, that strong, other than what we mentioned with the cryptos and the blockchain stocks, as well. So very, very thin breath for the day. I also wanted to kind of bring up this screen as well, right? This is, if we look at the breath screen, so that you could see the raw numbers. The Dow had 27 decliners, 3 advancers. The S&P had 410 decliners today, 92 advancers. And look at the 4-week new lows pick up today. Right. When I went over this yesterday, we saw a lot more 4-week new highs. Note what's on the list, right? A lot of things like, of course, the banks, but also a lot of energy companies, right? That was also something that was kind of interesting too. If we look at the oil chart for the day, which was down 5.4%, again, put your eyes back here, where we started to kind of make this move. Prior was when the banks ran into trouble, back in the beginning of March, right? We saw this breakout of the range. Of course, then what happened was this oil recovered. It had the OPEC supply cut, but notice that is giving that up, right? And that's a decent down day in oil, right? So we're starting to see, again, you could look at like XOP, for example. Right. So again, here was the breakdown that you saw in March with the banking situation going on, right? And you can kind of see that this is starting to look vulnerable once again. All right. Also, kind of goes back to the, it always makes me laugh a little bit when I see people talk about, oh, we're in, whether bull market, bear market, right? These people will argue back and forth, right? Oh, well, we started our bull market back in October. I've heard this one argument on Twitter, right? Well, that's where the majority of stocks, made their low. Okay, that's some stocks. That's not all stocks, because I will show you right here, the micro caps, right? This is making new multi-year lows, right? And here was your last year October lows were all the way back up here. So notice where this is, right? So I think people just have to kind of get over this, or if not, I give you my opinion regardless. But some stocks remain in a big bear market. Some stocks are doing something different and they're in a bull market, right? And the overall market is sideways, right? And if you don't believe me, you could look at any index that you want to. You could look at the equally weighted S&P. You could look at the S&P 500 futures, right? We are inside the value area for the year. That's where we've been all year long. The Qs remain that way for now too. This could change, but for now, and even the small caps, they are, barely staying in that value. But overall, the majority of stocks are range bound. They've been sideways, for this year, even though they've made some gains, depending on which index that you look at. But for the most part, when you look at the weekly chart, you can see the majority of stocks are sideways. Some are in a bull market, some are in a bear market. All right, easy way to kind of define things. Other themes, I started to talk about crude in a little bit, which we did. Oh, I was talking about, sorry, I lost my train of thought here, but yes. So other than the banks all over the 4-week new low list, things like Regions Financials, HBN, Key, right? All kinds of banks on here that are back on the lows list, but also energy, right? Some areas of industrials also on the list too. Like I see a Carriers on here, an IP's on here, right? So International Paper. So, and then if you look on the left side, then you've got some good stories out there. Look at GE making another new high for the year, right? So they're up to 102. They closed, I think, at around 101.50, right? You've got some healthcare on here, Cardinal Health. That name is going to report this week. ABC had a good report. You've got auto names, Orly. You've got travel names, Booking. Here's another healthcare name, Vertex. Zimmer had a nice earnings report today. I don't know why, but I don't see. Oh, maybe because this, by the way, this is just the S&P. This is not NASDAQ, right? But again, you've got some really good stories. Merck made a new high today. Eaton had a good earnings report, right? I was going to mention Uber. Right. Uber had a good report today, up 11% today. Nice weekly chart for Uber. Right. So there's even though the market was down today and there was some very poor breadth, there's still, one day's not a trend, of course. Even though we have been seeing breadth trend lower for the last couple of weeks, but there are still a lot of positive things with this market too. All right. And, and here's some of the aftermarket movers, which I could show that as well. Because again, there's some good stories, I think, that are taking place here. Post-market, SMCI is up 9% after the close. MUSA is up 7%, right? Yum China is up. So again, there's a handful of names, also a decent amount of names to the downside. AMD is now down 4%. Hertz is down, right? So so on and so forth. Starbucks is something that would be interesting because they had a good report. So they just ran up into the report. So that's a name to watch tomorrow. I was going to just go through a couple other names, talk about some of the positives. Nike was a name that is standing out to me. Only down about 0.5% today, so outperformed. I think this chart looks good. The home builders, right, with rates moving the other way today, rates moving lower today. Home builders, right, this is really where there's the leadership in this market this year, continues to act very well. Just barely down for the day, right? And holding above that value area. I didn't talk too much about the indices. I've kind of been, I send out a note on Substack that you can read, talking about that. But I think the main thing for today was that, we talked a little bit about this pre-market. Again, not exactly a straightforward inverted head and shoulders. Sorry, head and shoulders, not inverted head and shoulders, but you can see left shoulder, head, right shoulder, and we not only broke this line, but we broke into the value area. So I'll kind of end it here for today's video, but I mentioned I would say something positive, right? I do think tomorrow is the Fed day, right? They are looking to raise interest, even with today's market action, they're still implying an 87% chance that they raise interest rates by 25 basis points. But I think what would be perceived somewhat positively if Powell gives us some type of all clear signal that they're going to be pausing interest rate hikes for the time being. If he comes out and he's wishy-washy about the inflation and the jobs data, and he says we're going to have to wait and see, probably the market's not going to like that. But if he comes out and says, hey, I'm watching what's going on with the banking situation, which they are partly the cause for that, raising interest rates so fast and really being late doing it. by the way, my opinion on the level of interest rates is not all, I don't think 4.8 is the worst thing in the world. It's just the pace that they increased interest rates. They were so late and had to do it so quickly. You knew that they're going to cause some type of damage by raising interest rates this fast. So I think the best thing that he could do to settle down markets is to basically hit the pause button. Whether or not he does that, that's up to them. And it's basically, if they go back to the stupid argument about them losing credibility, then then I think that that's not a good sign for the overall Federal Reserve. All right, guys, I'll leave it there. Hope to see you as a member of Tribeca Trade Group. We start our pre-market session every day at 9:10 in the morning. Have a great night, everybody. See you tomorrow.